everyone, welcome to today's morning report with me, Richard Perry, market analyst at Antic Markets. We've got a risk-off market today. This issue over Qatar seems to be impacting, I think, increasingly with this sort of destabilisation that's going to be occurring in the Middle East, with Saudi Arabia leading a group of 7 countries that are sort of severing their diplomatic ties with Qatar. I mean, what would Qatar do? Basically, would they then start to side far more with Iran and Turkey? There's issues over sort of the argument being that Qatar are supporting extreme Islamic extremist terrorism, and it sort of doesn't help the stabilisation of the region. That's sort of driving the oil price even lower. Let me show you how the oil price has reacted. The oil price continues to fall away, as it has done in the past week, ever since that OPEC meeting. The sort of theory being that, well, first of all, the OPEC meeting pretty much arguably underwhelmed, and so the market sort of sold off on the back of that. But then how destabilising would Qatar be within that OPEC sort of environment? And it's certainly pulling pressure on the oil price, but also safe haven assets are being bought in response to that. You've got volatility at the moment, which remains very low, doesn't it? I mean, you look at the S&P 500 options, very low in terms of the VIX volatility, with the S&P 500 still very high. There is certainly scope for a corrective move if there were, if that were to be seen. And certainly at the moment, the European markets are sort of moving into possibly that sort of direction. You've got safe haven trades which are performing well. The 2-year yield slightly low in the US, but the 10-year yield again falling away. That continued sort of flattening of the US Treasury yields. The yield curve continues to be a problem, and look at that, the 2 to 10 spread continues to plummet, which suggests that the market is fairly confident about the US Federal Reserve hiking rates at next week's meeting, but further out, the implications for growth and also inflation going forward, with the data recently in the US underwhelming, to say the least. Certainly payrolls on Friday anyway, so the dollar is under pressure on the back of that. Now, generally speaking, today what we have got is not a lot of economic data to really change the outlook. We've got the jobs openings at 3 o'clock, but pretty much other than that, that's it. We had overnight the RBA, Reserve Bank of Australia, with the interest rate decision 1.5% holding fire there, but with I mean, this table doesn't show it. However, you could argue that certainly the Aussie trade deficit continues to fall, and that is a problem, and that sort of is impacting on the expectations for growth going forward for Australia, and subsequently sort of downwardly sort of making downward expectations on possible rate cuts for the Australian bank there. So that's basically how the markets are playing out today. So my chart today is the euro yen. Now, euro yen does tend to fall when markets are getting more risk averse, and that certainly seems to be the case. But I've been talking about this top pattern for a while now. It seems as though it's ranging between sort of that low at 122.55 and up towards 125.80, which was hit a couple of times in May. But every time we get back towards 23.30, seems to be a bit of a flaw. Certainly intraday, that tends to be an area where the market has held, although obviously 22.55 was quite a considerable break, but it didn't close below that level. So we're now back at that level again. If you start to see the market closing below 23.30, that would be an indication, I think, of the bears getting control, because you've got these momentum indicators which are falling away. It could then turn into a big top pattern. It's not yet completed by any means, so I wouldn't be preempting this one at all. But the momentum indicator sliding away suggests a bit of a concern. But preempting top patterns before they complete is usually a bit of a bad idea, because the old adage that the trend is your friend in technicals tends to win the game in the end. But at the moment, the pressure is growing to the downside with this sort of increased safe haven sort of bias that we've got in trading today, and the euro yen is reflective of that. You've seen that move overnight where the market's fallen quite sharply below that 124.10, which is another old pivot, and looks increasingly corrective. Be looking out to be sort of selling into strength. That hourly RSI around 50 seems to be limiting, and maybe a little unwinding rally. Maybe 24.10 would be that rally point, but certainly you'd be sort of looking to possibly sell into strength within this range now, because that 24.10 seems to be sort of a fairly reasonable midpoint around the range. But for now, the pressure is growing to the downside in this range, and it could well sort of be moving towards the completion of this top pattern. So watch out for a close below 23.30 to really suggest the bulls are sort of losing their way, and the selling pressure is ramping up. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.